Hi, everyone. I'm Mark Phillips. I'm the founder of Harvested Financial and the producer of the TAPE report. And because I am a financial advisor, I just want to remind everyone that this does not constitute financial advice. We're here to talk about the software. We're here to talk about options trading education, but it is not a recommendation to make any specific trades or to buy or sell any specific securities. If you have any questions about that, please visit my website at harvestedfinancial.com, and there you'll find all the different terms and conditions. But today, what I want to talk about is liquidity and the LIQ Index that we've built to track and monitor that. So liquidity really is the lifeblood of markets. It's the combination of the ability to buy and sell, how much trading volume is happening, how tight spreads are. And what we do at TheTape is we combine all those different indicators to produce two different things. One, the LIQ Index measures how much liquidity is in a given issue and how that changes over time or might compare to other issues. So that really helps with execution and knowing about your ability to get in and out of a trade and how wide and deep you can expect markets to be. The second way that we use LIQ, which is what we're going to focus on today, is as an opportunity identification tool. So we have three different reports that are going to look at LIQ in a couple different contexts. The main one is the LIQ Top 250, and that's what we'll be focusing on. We follow the top 250 most liquid names because those are the ones that have the best indicators that we can create based on the number of expirations and strikes they have. So we're really focusing on where most of the volume is in the options industry. Something like 95% of the volume trades in these names. So that's also why we focus on them. The other two reports that'll look similar are the LIQ Picks and the LIQ Earnings. And the slight difference there will be that LIQ Earnings focuses on any of those top 250 names that have earnings within the next couple days. So you can use that as a filter to say, there's going to be an event happening. Let's track the liquidity going into it. LIQ Picks is the biggest change in liquidity. So for individual names, that tends to be driven by volume. For indices, their liquidity is a little bit more driven by the overall spread width. But LIQ Picks looks at the names that have changed the most day over day in terms of liquidity. So if you see a big surge in volume, if you see big turnover in open interest, could be a lot of closers, could be a lot of openers, which would also correspond with both of those with volume, but also spread width is the other component. So of those three components, we weight spread width against volume and open interest on the other side. So we're looking at turnover in that open interest. We're looking at changes in that volume compared to its month-long average or 20 trading day average. And on the spread width side, the way we think about LIQ is as a implied vol width. So that implied vol width would be the distance between the bid and ask spread in implied vol terms. So for something like SPY, that might be very, very tight, 0.1, 0.2%. For some of the less liquid names, that can be a 0.2, 3, 4, 5 points sometimes. And each of those components, as you'll see in this chart, make up the liquidity score overall. So as I mentioned, for something like SPY that we're looking at, this vol width, which is the volatility width of the market, is a big driver of the changes in liquidity here. Volume and open interest in SPY don't turn over quite as much. There's a ton of volume, but there isn't necessarily big changes in volume the way you might see in an individual equity. Things like earnings, which is why we have LIQ Earnings, is a major driver for equities. But also announcements and other news events can generate volume, and so that's why we track changes in relative volume. If I look at something like, say, Airbnb, we're going to see that the light blue volume calculation is really what's moving the liquidity score around. So this is a little bit more what a typical equity would look like. We're going to have earnings are pretty easy to pick out when you see the spikes here. Big turnovers and open interest actually for Airbnb with these yellow bars. But compared to SPY, that volatility width, spread width is not a significant driver here. Markets are relatively wide in Airbnb compared to the insanely tight, deep markets that we have in SPY and SPX. As far as overall levels, this orange line tracks the 10-day moving average, which we can see in Airbnb, as of the last 10 days, is about 65 right now. Most of these top 250 names are going to average a little over 50. There very much is a concentration of liquidity and depth in the options markets. Typically, the indices will trade between 20 and 30% of OCC volume. So your NASDAQs, your SPXs, I bucket in Qs and SPYs in there too, because those are really, all the same sort of macro themes. So indices make up a massive percentage of the volume. And then the top 10 names, your Apples, Microsofts, Teslas, Nvidias are typically your top equity names. That top 10 constitutes a majority of the volume out here. Those tend to be in the 100 level. I'll pull up Apple and we can see, recently Apple actually scored about a 173. 100 would be the floor there, getting up into the 200s when we have earnings. But then again, I'll pull back up SPX for that, and or SPY, and we can see that, as I mentioned, what's driving it to these 400 levels is really that volatility width. So the LIQ Index really is used in two dimensions to recap. We can relatively compare SPY to Apple, to Microsoft, to SPX, and kind of get an understanding for what those different relative liquidities are. Pull up NDX. Interestingly, NDX is one of those names that the index itself is not particularly liquid. This is arguably less liquid than Apple. But if we look up the Q ETF, the Q ETF is going to be quite a bit more liquid. This isn't quite the level that SPY might be, but we can see decent liquidity and actually trending up. We're just the week before Thanksgiving here, and it's really been trending up actually over the past month. So getting some tighter markets, more activity in the Qs. That tends to correspond with rallies. Generally, market makers provide tighter markets the more certainty there is, and the more certainty tends to also cause the appreciation of stock prices. So that sort of market width and stock price tend to be somewhat correlated. On the other hand, though, down markets do drive a lot of volume. There can be a lot of, panic put protection buying or call overwriting as stocks fall. There are a lot of different options trading strategies that see, a big perk up in volume on down markets. So, LIQ overall is not totally correlated to market direction, but in something like an index where spread width drives that, you do tend to see a little bit more of that correlation. So overall, liquidity, as I said, is the lifeblood of markets. And at TheTape, we've created this LIQ Index so that you can see what's moving, see what the LIQ Picks are, see what the most interesting changes day over day. Here we have TSEM. Not familiar with this specific name, but we can see a huge pop on that. So this might be a kickoff for me to investigate what else is going on and use a lot of the other tools that we have at TheTape to understand what's happening. Might do some research outside, understand what news is happening. Was there earnings? Was there an announcement? We can also use it, as we've done a little bit here, to compare against different issues and understand the relative depth of executing in QQQ versus NDX. And that might make a strategy decision for you. Do you want to trade the ETF or do you want to trade the index that might have other benefits to it? So liquidity drives a lot of our trading strategy investigations and ultimately all the way through to execution and putting on the trade and knowing what to expect to get out of it. Thanks so much for watching this. Please hit the subscribe and like button below. Subscribe will get you signed up for all the future updates that we have. We're going to be talking about more strategies, different ways to use these reports for different objectives. And you can also check out some of our other tutorials here in this tape playlist. So thanks again for watching. Happy trading, everyone. And check out harvestedfinancial.com/TheTape for more details on all of this.